Well, I think we're on pause here. They started out last week. The president surprised by announcing that he could do tariffs on another $227 billion. So that's a total of $427. That got everybody puzzled. They had the Dow drop 182 points in a matter of minutes. And then by the end of the day, they were trying to struggle back when Apple went to the trade representative and said the new tariffs might both raise our prices, hurt our sales, and hurt our earnings. Nothing new happened over the weekend, so if anything, this is a sigh of relief response in the futures.
You got a sigh of relief, and Art, also you had this big pullback in the big techs last week, really where all the action was. S&P down 1%, most of it from the big cap growth stocks. Do you think the market is tuned into, the good jobs report and all the rest of it, or is it just kind of caught up in its own, field position games, going to a new high and pulling back?
Well, I think it's trying to sort through what it wants to do. You've got a variety of market indicators that tell you the market may be ready for a pause or even a pullback here. Goldman Sachs indicator is the highest it's been in a couple of decades that predicts pullbacks. My friend and fellow veteran Jeff Sort has a model that indicates a possible stall here. So then we've run into some real resistance. So I think you got a pullback. It'll be interesting to see if the market cares about the old tradition of sell on Rosh Hashanah, buy them back on Yom Kippur. So far, no sign of it, unless you sold them Friday. But we'll wait and see. This year, the Jewish holidays are a little early. They usually fit in toward the end of September, the beginning of October. And that may well have had something to do with crop rotation and money going out. But historically, it's had a pretty good record.
So I'm curious, Art, we had Apple on Friday say that the tariffs, the $200 billion round, would impact a wide range of goods in the markets. While Apple finished lower on the day by about 0.8%, mostly looked through that. Do you think that investors haven't gone through the exercise of actually saying, you know what, if $200 billion goes into effect, it will actually hit prices and it will actually impact companies? It almost feels like investors are looking through that, saying, you know what, we're not too worried about that at this point.
Well, I think that's because they believe all of this is still a negotiating stance, that the president is posturing. Everybody's got the feel that his art of the deal is to come in with a wild opening ploy, and when everybody recoils, says, okay, maybe we can work out something around here. So that's one of the reasons, the tweets come out, they shock the market, but usually you wind up coming back because everybody still thinks it's negotiating ploys.